Hey, welcome back. Today we continue on REIT rights issue. You're invested in a REIT for stable income, then bam. The announcement comes. A rights issue. Your first thought, oh, am I about to be diluted? It's a common investor fear. Does a REIT offering new shares mean trouble, or could it actually be a hidden opportunity? Let's dissect this crucial topic. Chapter 1. What is a REIT rights issue? First, what exactly is a rights issue? It's a way for a REIT to raise capital by offering existing shareholders the right to buy new shares, usually at a discounted price, within a specific time frame. For example, you might get the right to buy one new share for every 10 you own. This sounds great, right? A discount. But here's where the NAV dilution comes in. Chapter 2. Understanding NAV dilution. Formula. NAV equals assets, liabilities, shares. Remember, REIT's net asset value, NAV, per unit is the market value of its properties minus all its liabilities, divided by the number of shares outstanding. It's the true book value of each unit. When a REIT issues new shares, especially if the issue price is below the current NAV per unit, it can cause dilution. Mathematically, you're increasing the number of shares without a proportional increase in the total net assets relative to each share. Imagine owning a piece of a $10 pizza, NAV per unit. If the REIT suddenly adds more slices by using new ingredients, raising capital, but sells those new slices for less than $10 each, the value of your original slice slightly decreases. You now own a smaller percentage of the overall entity. So, yes, a rights issue, especially a dilutive one, can immediately reduce your per unit value. Chapter 3. Red flag or opportunity. Dissecting the why. So, is NAV dilution from a rights issue always a red flag? Not necessarily. The critical question for investors is, why is the REIT issuing these rights? It's a red flag if, frequent and unexplained issues, the REIT is constantly doing rights issues without clear, high-quality reasons. This might signal poor cash flow management, underperforming properties, or an inability to sustain growth without continuously tapping shareholders. No clear strategic benefit. The capital raised isn't being used for a compelling, value-add purpose. Is it just to patch up holes? For instance, is the REIT doing a rights issue because its loan-to-value, LTV, ratio is too high, and it needs to reduce debt to stay compliant? This is a defensive move, not a growth move. It's an opportunity, or justified, if, funding high-yielding acquisitions, the REIT needs capital for a major acquisition of attractive properties that promise strong, immediate rental income. The dilution today is a calculated move for significantly higher distributions per unit, DPU, and FFO tomorrow. This is growing the pie. Look for a high net property income, NPI, yield on the new properties. It shows the new capital will work harder for you than the old. Strengthening the balance sheet. The funds are used to pay down high-interest debt, reducing the loan-to-value, LTV, ratio, lowering financing costs, and improving the REIT's overall financial health and resilience. A stronger balance sheet makes the REIT more attractive to lenders and allows for cheaper borrowing in the future. Strategic growth with clear returns. The capital is being deployed into development projects with high pre-leasing commitments and clear potential for value creation. Always scrutinize the prospectus to understand the exact use of proceeds. Chapter 4. Conclusion. Your smart investor takeaway: don't panic at the sight of a REIT rights issue. Instead, arm yourself with knowledge. Understand the immediate impact of NAV dilution, but then pivot to the bigger picture, the strategic purpose. Is it funding sustainable growth, reducing risk, or simply patching up a leak? By asking these questions and checking key metrics like NPI and LTV, you can turn a potential red flag into a clear understanding of your REIT's future. Chapter 5. Disclaimer: information in this video is provided for educational purpose only and should not be considered as financial advice. Always do your due diligence, or so speak to licensed financial advisor before making investment decisions. Subscribe for more bite-sized investing insights like this. Thanks for watching, and see you in the next one. Chapter 6. Thank you. I'm so happy you landed on my channel. Just 2 months ago, I started this journey creating finance videos to help fellow Singaporeans. I value your comments so I can make more content you love.